Traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. So I'm going to go ahead and grab our bias chart here, and we're going to get started with our analysis. And like I said, I'm a little nervous about trying to play the dollar on the long side at this point. You know, the euro dollar, the pivot from like the 111 area, you know, has me a little concerned. You know, it's been a hell of a pullback, and you can see that the euro looks like, in my opinion, that it's trying to bounce here. Okay, and so I have my hesitations. Here, let me get rid of this. I have my hesitations about trying to play the euro to the short side down here as we close in on this major, what I consider major channel support, or you know, it's a pitchfork for those of you that are following along, like a longer term pitchfork. You know, so as we approach the 111, 110, 50 area, and you know, I was curious to see if we could make it all the way down here, because I really wanted to be on the long side as we approach 110.50. I just don't know if we're going to get down there, at least not ahead of the data right now. Excuse me one second. Okay. See here, you know, again, my hesitation lies on, you know, we've had this really nice pullback, and you know, we've gone from 116 to 111. You know, it's a 500 pip move, basically nonstop, unadulterated move. And the good news is we've been playing the dollar on the long side for the last several weeks. So, you know, but you know, you've heard my hesitation over the course of the last couple of days and the last week, really being cautious as we get down here. And even though I was on the short side, I want to say Wednesday, Thursday, and I closed out my short position, you know, at 111. I think I got out at 111.30 on Friday. You know, even though I was playing on the short side, I knew I was going to stick around long. And it does look like that we're breaking higher. So the question is, how far can we go? And I think for today, 112, this 112.50 or 112.15, I meant to say 112.20 level, that should offer us really good resistance for today. And if we can get above that, that's obviously going to induce some more, you know, some more dollar weakness. So we're going to write down 112.15. Whoops, 112.15 as key resistance for today. We have been bearish, but I'm going to put us back in a range. Okay, you know, remember, we've been bearish really for the last several, you know, I want to say the last couple of weeks, but given the way that we're pivoting off of this support here, I think it's major. Now, anybody who is short the euro dollar, in my view, is going to be very happy to get down towards 111 if we can. I really doubt we even make it anywhere close to that today, frankly. Right? Personally, I think the way to trade the euro is just be on the long side, you know, as we head back towards 112. I am not long the euro. I'm just saying, okay? But 111, oops, 111 is major support. All right? Any dip down towards there are going to be buyers. Now let's look at the cable. Now, you know, we're just a few weeks away from the referendum, which is on the 23rd. So we're like 3.5 weeks away. I expect some major volatility, you know, due to the referendum. You know, you know, how to trade the pound right now? Yeah, I don't know. I would probably buy or sell massive volatility, like volatility spikes. So in other words, if we spike down to the 38% retracement again today, that's going to be a great place to be on the long side. We spike up to 147, that's probably going to be a great place to be on the short side. I think you got to play it into this massive volatility. In other words, don't chase the pound higher or lower, but when it spikes higher or it spikes lower, spikes higher or spikes lower, you play into the counter trend type of moves, as long as you can find some support. So like for today, I would assume support now is at 145.70. Okay, resistance is going to be back up here. I might even say 147 at this stage in the game. Any move back to 147 is probably going to offer good selling opportunities. To imagine this probably will look something like that. Okay, so any move up to like 147, would be probably a great short. And I don't think there's a whole lot to do with the cable right now. I don't think there's a lot to do at this stage in the game. All right. Let's go over the Swissy. So the Swissy has been unbearably strong, and unbelievably strong. Actually, I can believe it. It's been more of a irritating to me that I have not seen any substantial pullback. But this false breakout above the highs right here, that false breakout above the highs is probably going to lead to a breakdown, which is good. I mean, I view it as a good thing. I really want to see us dip to like 98 cents because I'm a buyer down there. All right, I'm a buyer down there. So for today, so we had a false breakout to the downside, led to a breakout to the upside. And again, if we get a false breakdown to the we got this false breakout to the upside, it's probably going to lead to a much bigger drop here. Support is key at 98.70. I'm really hoping we break through that. 0.9870. And resistance now, and let's figure out if we stop there for any particular reason, because I think we did. Oh, we stopped right at the 618 of that move, yeah. I mean, there's a ton of resistance up here. So again, what I'm looking for is I'm looking for a dip down towards 98 cents to be on the long side. So from here, 99.50 is major resistance. 0.9950. Major resistance. Okay. We have been bullish, but I'm going to slip us back into a range as well. Remember, we've been playing on the long side. Whoops, we've been playing on the long side of this one for a while. Well, as a bullish move, but I think we're still in a range. So any type of dip now towards 98 cents, that's where I'd look to be on the long side, me personally. And I'm really hoping that happens. Let's go to the okay, so that was we'll see. Let's go over to the yen. Okay, so now with the dollar yen, remember that was the channel breakout, right, from Friday? Now, I personally don't know. Well, I don't know how to play the dollar yen because part of me wants to obviously if I think equities are a little peaky here and I think that we're a little higher than we should be, I want to be on the short side of the dollar yen because I think equities will come down. But the flip side to that is I don't want to short the dollar yen because we're breaking higher. So technically, what I'd like to see in here, let me remove all this stuff. This didn't translate over the weekend. All these lines, we had it all looking like it was a breakout, with arrows, and the lines didn't transfer over the weekend. So, um, yeah, I mean, you look at this triangle. The triangle probably matched, a nice target coming out of the triangle. Something that looked like that. Pretty damn close. So now you have to look at any dip down towards, well, first of all, 110.60, but we might even dip further than that, depending on how far the dollar can pull back. I would say 110.60 all the way down to 110. This whole area, like this whole area right through here, this whole area is a buy zone for the dollar yen. Um, if you can get a dip down here, anywhere from like 110.60 to 110. Obviously, I wish I, had a better idea of how deep the dip will be, but I don't because, I don't know how far the dollar is going to pull back against everything else. So, with that being said, the question is, are we going to dip down to 110 or 110.60? You know, uh, but I sure as hell wouldn't want to be a buyer right now. Now we could very easily, and I might be wrong here. So I'm just because I think we're going straight up from, or I think we're going to pull back from here, doesn't mean we can't go straight up. We could end up being a flag, right? Breaking higher, and then this thing's gone. We will never see down here. But I have a hard time buying the dollar yen right at this moment, right? But we may be flagging and just ready to launch higher. Entirely possible. It really is. Um, that means that this high, which is 111.44, which is right there, that is key resistance. Let's write down 45. That's key resistance because if we get taken out of there, then and this is bullish, um, because we're breaking out of that range bound bearish channel. We're breaking higher. So if we break through this resistance, that means that's actually a bull flag that we're looking at. Okay. All right. Let's do the Canadian. So today we got Canadian GDP. Now the market's looking for month over month negative 0.1%, annualized GDP, looking at 0.8%, quarter over quarter. The market's looking for a positive 0.2%. So, but for the month over month, people are looking at a negative print for Canada. Now, also keep in mind that the dollar Canadian, in my opinion, here, let's get rid of a lot of this stuff. Let me remove. A lot of these fibs here. We can always redraw them. Just getting rid of this stuff. Give me a minute. Okay. Um, we still have this big inverted head and shoulder pattern, right? Which I'm happy about. I'm happy with the fact that we're holding above 130. Okay, the fact that we're holding above 130 with crude oil near $50, there's something to be said about that. I mean, the dollar Canadian is holding up exceptionally well. Now, I know it's come down just over this last hour. We've come down a little bit, but like I said, with crude oil near so close to 50, I'm surprised we're holding up as well as we are. Dips to 130, which will be a 50% retracement of this entire move. That should hold us up. Okay, so dips to 130 should hold up pretty well. All right, or dips down to 130. It's a nice round number. You know, basically a breakout point over here. Roughly 50% retracement. I know that's 130.15. 50% retracement comes in right there. I think that should hold up well. Resistance, looks like moves up towards 131 are going to be a struggle. It looks like any move above 130 or towards 130.90 is going to be a struggle. So I'll write down 131. And I think you just got to trade this range, oops, 131. Okay, and it in my opinion, it's still pretty bullish, but we're in a range environment right now, and coming into the GDP number, I mean, it's hard to get too aggressively, bullish or bearish right now. I think crude oil, what happens to crude is going to have an effect on the dollar Canadian, obviously, and then what happens in with the Canadian GDP, which we'll cover here in a half an hour from now. So, all right. Yeah, speaking of which, when I come back, we're going to do the Kiwi, Aussie, everything else. So, dollar index. Don't go anywhere. I'll be back in a few moments. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session, and happy Tuesday to you. Okay, so we still have we have a few things to do here. Let's go over to the, and by the way, Dow futures are up 34 points. Gold is just sitting there. Crude still, holding up pretty well. Pretty tight ranges for crude oil. Speaking of which, let me look at something with crude. Stand by for a second. We're in tight ranges, but I mean, look at this 4-hour chart. You look at crude. Very intraday. Basically, right there. See if crude stops up here at these prices. Kind of curious to see if we do. Well, I hope we do, being that I'm long the dollar Canadian. Anyway, Let's go over to the Norwegian. No, no, no. I'm sorry. The Kiwi dollar. So the Kiwi looks pretty firm. You can see we're bouncing pretty aggressively with the Kiwi this morning. Nice move up. You know, coming into resistance. We if we have then a descending wedge, which I think we did, we had this major support at 67 cents that we just could not break below. And I don't have. I mean, I'm short the Kiwi through the Aussie New Zealand, but I don't have any other. Oh no, no, and I have the Euro New Zealand long, which isn't looking too hot at the moment, by the way. But it's so small; it's just a small position. I'm not really focused too much on it. It looks like the Kiwi will get another, a lift up towards this resistance here, which will be up towards, let's just say 68 cents or so. Looks doable. Okay. And then obviously support is at 67 cents, but it's really down here at 66.75. Looks something like that. Okay, so 68 cents. So if you want to be on the short side of the Kiwi, 68 cents looks like the place to do it. 68. That would be good resistance. Then we have 0.6675 as support. And I still want to say that we're in a bearish trend, and that's because we came out of here, but the thing is we haven't really followed through. So I probably need to keep it in a range, and because it's frustrating. Fortunately, I haven't done a lot of trading of the Kiwi dollar because this has been a very frustrating last several weeks, and I think a lot of you have really told me that too. You've said, my God, this Kiwi's just not moving anywhere. I don't think there's just a lot of reason to pay close attention to it. We do have I think we have dairy auction results coming out tomorrow. Let me make sure of that. Yeah, we do have dairy auction results tomorrow. Maybe that might goose the Kiwi a little bit, but right now it's just nothing to do. I might actually try to short some Kiwi up here at 68 cents if we can get it, ahead of tomorrow. Let's go over to the Aussie. Now the Aussie, we've had a decent pullback, and I've been a little worried about the Aussie dollar just in general, because with risk appetite as strong as it's been, I'm like, the Aussie is just weak, and I would say we're pushing pretty key resistance at this point. We might push up to the 72.80, which will be the 618 of this last drop. Looks like that might be 127% extension of this move too. No, we already hit the 127% extension there. So I'm going to put down not great resistance, but resistance at 72.80. We're actually at resistance right now, but I don't want to write the current high. So 72.80 will be some resistance. I still believe the Aussie is pretty bearish, but also we've really held here the last week and a half. Okay, so it'll turn back to bearish if we take out this support, but it's come down you know, towards the 618, and it's really been bouncing around here. So I'm going to put it back in a range for now. Okay. Um, if you want to be on the long side, I don't know if this is the right place to do it, but I think if you can get a dip back down towards like, maybe 72 cents actually, that probably is a better place to be on the long side. If you're trying to play this range, just buying a dip down there if you can get it. Okay. Um, okay. Dollar index. Okay. So here's the dollar index. Now let's remove this. Okay, we're still above this channel resistance. The thing that I'm most concerned with the dollar is that we're not getting, here, let's do it that way. We're not getting any upside follow through, right? So I'm a little concerned that the dollar hasn't pushed, right? Like getting up today, it's like, okay, I expected the dollar to be stronger, and it really is just kind of sitting there. Um, I thought coming out of this weekend we were going to be a little bit stronger, but we just haven't had any follow through whatsoever. So, uh, like that's going to be major support if we can get down there. I just don't know if we're going to get all the way down there today. 95.30 should offer some support. Oops. And then, resistance is obviously going to be those highs, which will be 96 cents. And I think that's major. Because if for some reason we bust through 96 cents, and you have to realize that the dollar is really bullish here. I'm going to put it in the range. Even though we've come out of this, even though we're come out of this channel, the thing is looking around at the rest of the dollar pairs. The dollar pairs have me a little hesitant getting too bullish here. So now if we break through 96 cents, that will be really bullish. But that was 127% extension of this down move here. It stopped us. It's a round number. We get above 96, and then that's going to be probably a pretty bullish event for the dollar. And I would assume that most people don't think that that's going to happen just yet. One of the other things about the dollar is, like on Friday, I think the dollar squeezed a lot of people that didn't want to be short. I mean, it screwed so many people because there were a lot of dollar bears, like mid to late last week, mid to late week last week. There were a lot of bears in the market. A lot of people were bearish the dollar. After those comments from Janet Yellen on Friday, they all got squeezed. And the market's pretty efficient at screwing as many people as they can screw, and that screwed a lot of people on Friday. A lot of people were real bearish the dollar, Wednesday, Thursday, Friday, and then Janet Yellen let out those comments. It squeezed them, and now that all those people got squeezed, now we're pulling back. Okay, and I'm sure anybody who got squeezed on Friday afternoon following Janet Yellen's comments are probably looking at the dollar right now, going, "Gosh, damn it, I got squeezed." So. I think that a move above 96 cents is going to be really bullish. It's going to squeeze some more, but I'm assuming that dollar shorts are probably putting their positions back on today, this morning. let's go over to the peso. Now the peso still stuck between this 1830, 1860 level. So I think anything's changed there. This has been bullish, but man, we got stopped up at this big cluster, major resistance here. So I'm going to put us in a range for now because we're not able to follow through back to the upside. I think a lot of that has to do with crude as well, though. Let's go to the Norwegian krona. Here's the Norwegian krona, and we still have this inverted head and shoulder pattern. Still plays up to 855. Okay. Last week we held this trend line support. We held that trend line support, so any move towards 830 should be very well supported. Okay, so 830 will be support. Resistance is 840, and I think you just need to play this range. This is still bullish here. It's 840.50 actually. It's key resistance. Let's go over the Swedish krona. See, on Friday, I looked at that Swedish krona. I almost got suckered into it. I really almost bought it on Friday because I was looking at this flag and I'm like, oh, we're up here. Somebody had asked me in the chat room, like, hey, Blake, are you going to buy that Swedish krona coming out of that flag? And I'm like, God, it looks bullish. It was C-Note actually in our chat room, and I looked at it and I said, you know, if I'm going to buy it, I'm going to buy it on Monday. But looking at it right now, I'm a little hesitant to buy dollars at the moment, as you can probably hear my hesitation that I've got just in general. I'm going to remove that for a moment. So while we're above this 827 or 820, yeah, 826, 827, that's support, and it's pretty bullish, but $826 key resistance comes in at 838, and the reason why that is because it's around the 618 retracement, but it's holding up really well. I mean, you look at the some of the dollar weakness coming through. It's really not coming through these Nordic currencies. Okay, so I mean, if the dollar just starts to bounce, I mean, we could really get a nice move here, especially if we break this 830. Yeah, 838. Is that 838? Really is? Yeah, I guess it is. Okay. And frankly, it still looks pretty bullish. These Nordic currencies, like I said, they look relatively weak, even in light of the dollar pullback we've seen the last 24 hours or so. All right, there's your bias chart. I'm going to leave it there for you. I'm going to take a few questions. Hold on.